What's up, traders? So today I'm going to show you how you can bring in an additional $5,000 per month using LEAPS options. Now, if you're new to the channel, my name is Rashad. I am a full-time options trader. I bring in multiple six figures a year trading options, and I use the money I make from the stock market to pay for my entire lifestyle. Now, the strategy that I'm about to discuss is great for busy people. If you have a 9-to-5, if you have things to do, or you just don't want to be checking the stock market multiple times a day, then this is a great strategy for that. But before we get down to business, if you could please hit that like and subscribe button, that would mean the world to me. I actually recorded this video yesterday, but once I totally finished recording, I realized that the screen recorder wasn't recording the screen. And for any video creators out there, you know how much that hurt my heart. And especially for me, because I'm not a natural in front of this camera. So I stumble over my words a lot. And oftentimes it takes me about an hour to an hour and a half of recording time for what ends up being a 15-minute video. So please, if you could help me out and hit the like and subscribe button, that would mean the world to me. But let's get down to business. All right, so I have QQQ pulled up and it's currently $516. And today was a huge green day, up over 2%. And this was actually the biggest green day since right after the election. So it's kind of cool to see some relief in the stock market because we've been having a lot of red days recently. But you can see that there's $314 billion assets under management for QQQ. Now, QQQ just follows the NASDAQ 100, and the NASDAQ 100 is made up of 100 large cap companies that have a huge focus on tech. And so let me show you the companies that are within this ETF. Here's a list of the companies. Now, the larger the market cap of the company, the bigger their percentage of their holding within this ETF. So you can see here, Apple is 9.33% of this ETF, Nvidia is 8.67%, Microsoft 8.12%, and so forth and so on. We have Amazon, Broadcom, Tesla, Meta, Google, Costco, Netflix, T-Mobile, etc., etc. And that's the beautiful thing about ETFs is you have no single stock risk. So say if you're bullish on this stock and T-Mobile has bad earnings and they tank 10% in one day, you're not going to be hugely impacted because T-Mobile is only 1.57% of this entire ETF. Now here's the all-time chart for QQQ. So it started back in 1999, and I want to point something out to you. Now you can tell from the chart that over long periods of time, it tends to go upwards. But something else to note is that there has only been one time in QQQ's history that it went in a downward direction for more than 1 year. And that was back over here. We can see it started going down in Q2 of 2000, and then that ended around Q3 of 2002. So all of these candlesticks are 1 quarter, but that time period there from 2000 to 2002 was the only time where QQQ went in a downward direction for more than a year. All right, if we come over here, we had the '08 crash, but that lasted just 1 year and then it started going back up. And then most recently we had 2022 where it went down for a full year, but then immediately started going back up, and we've been going up ever since then. Now keep this in mind as we move forward with discussing the strategies. Now, if you're familiar with the channel, you'll know I always give the analogy of selling puts to car insurance. However, with this strategy of buying leaps and selling near-term calls, I compare that to purchasing a rental property. And so in this scenario, your leap would be your rental property. Just like real estate is an asset that tends to go up over long periods of time, a leap on QQQ tends to go up over long periods of time, as we just seen from the chart. So that's great. We have our leap, which is our rental property, but now we need to go out and find tenants who can pay us every single month. So let's head over to Thinkorswim so I can show you how this would work. All right, so now we're here at the options chain and I have QQQ pulled up. Now, first thing we need to do is find our leap. So a leap is by definition a long call that is purchased for a year out or longer. However, to get the best probability of profit, I like to go out as far as possible. So if we scroll down, we can see that January of 2027 is the farthest out expiration available at this time. And so we'll go ahead and click it, and I'll scroll down. And now the next thing we need to do is select our strike price. Now, when buying leaps, it's best to go deep in the money because that also gives you the biggest probability of profit. People that buy long out calls way out of the money are really just gambling. So what I do is I look at the delta column, which we can see here. Now, by definition, delta is the amount the options premium will move per a $1 move in the stock price. So for example, if we looked at this delta here, which is 0.80, this options contract will move up 80 cents per every $1 move in QQQ stock price. However, most traders look at delta as the probability of an event occurring. And so if we use the exact same example here at this 0.80 delta, that shows me that there's about an 80% probability of QQQ's stock price being above our strike of $430 by the expiration date of January 2027. So when I'm selecting a delta for my leaps, I like to go anywhere between a delta of 0.70 and 0.80. And so for this example, let's go ahead and use the delta of 0.70, and that would get us at the strike of $490. And if we look at the bid and ask prices, So the bid is $96.50 and the ask is $100.75. Now the price you see is the per share cost. Every options contract is worth 100 shares. And so when we're buying this call, we will pay 100 times the amount we see. Okay, so the bid is $96.50 and the ask is $100.75. So let's just make it easy, go somewhere in the middle, and we'll do exactly $100. That means we'll pay $10,000 for this call right here, right now, as soon as we open it. Now, here's where options become so powerful. Yes, we're going to pay $10,000 to open up this one contract. However, if we were to buy 100 shares of QQQ at $490, that would be $49,000. So we are quite literally paying 1/5 of the amount that we would have needed if we were just to buy the shares, while still getting the power and the movement of 100 shares. So that is perfect. We found our rental property, our LEAP. Now we need to go out and find our tenants, aka our short call. So I'll go ahead and close this expiration date. Now we want to go and find an expiration date anywhere between 30 and 45 days so we can get that monthly income. So let's come over here. Looks like this date 37 days out from now is right in the middle. So that is perfect. Go ahead and open it and I'll scroll down. And so what I want to do for the short call is I want to pick a delta anywhere between 0.30 and 0.40. So let's come over here. Looks like right in the middle would be this delta of 0.34 at a strike of $530. And the bid is $5.98. And the ask is $6.03. So right in the middle would be $600. So when I open up the short call, I will receive $600 up front right here, right now. So let's take a look at what we have so far. But wait. What if you can make money while on vacation, while spending time with your family without constantly worrying about bills? What if you can make the money for your entire vacation while on vacation? I personally trade options full time and generate multiple six figures per year, enough to comfortably provide for my wife and 6 kids, and our multiple vacations per year. In Trade to Freedom, I'll show you how to create passive income streams that keep paying even when you're not working. You'll get my exact trades as soon as I answer them. Imagine being able to take that trip you've always been dreaming of, knowing that your money is still working for you. The link is in the description below. I'll see you in the community. So we have QQQ, which is currently $516. And what we did was we bought our rental property, aka our LEAP, and we bought to open at the strike of $490 for 2 years out from now. And we paid $10,000 up front. And then after that, we went to go find our tenants, aka our short call, and we sold to open the call at a strike of $530 for 1 month out, and we received $600 for doing so. So that's great. We have our setup, but now let me show you a few technical indicators that I use in order to determine the best timing. So the first technical indicator that I use are the Bollinger Bands. Now, if you're not familiar with Bollinger Bands, they are just these black lines that are up here, but the Bollinger Band aims to just show you the range that a stock price is expected to trade within. And usually it's about 95% accurate. So if we come all the way over here, we can see it popped out, but popped right back in. It popped out, popped right back in. And it keeps doing the same thing. It may pop out for a few days, but it typically goes right back into the Bollinger Band. And we can see that the Bollinger Band currently expects QQQ to trade in within a range of $504 to $528. So when I'm entering into the trade, I prefer the stock price to be somewhere near the lower half of the Bollinger Band. Now we can see that after today's huge green day, it's right at the midpoint. And so yesterday when I recorded this video, it was down here, which would have been a perfect time to enter, but that's fine. It's still at the bottom half of the Bollinger Band. So that is the first technical indicator. However, my second one is the stochastic. So if we look down here, this is the stochastic, and the stochastic just aims to show you where the momentum is taking a stop. So right here, we can see that it is now pointing upwards. And so that is the direction that momentum is currently going. And for me, I just want to make sure that it is pointing upwards, and I would prefer for it to be coming out of this oversold area and pointing upwards, which it kind of did today. And typically it's better to enter into this type of trade on a red day because you'll pay much less for the long call. So now let's take a look at our calculations. All right, so we bought our LEAP, aka our rental property, and we paid $10,000 up front for it. And then we found our tenants, aka our short call, that will pay us about $600 per month. And that is for one contract, but what would the numbers look like once we scale up? Well, if we were to do 7 contracts, that means we will pay $70,000 for our LEAPs. But however, on the short call side, we will receive roughly $4,200 per month. And we should be able to continue to receive that monthly income as long as QQQ stock price stays roughly where it's at or even goes up some. With this strategy, QQQ going up slowly is the best case scenario. But here's where it gets even better. If we're able to successfully continue to get around $600 per month on our rental property, then it will only take us 16 months in order to pay off our entire LEAP. Well, that's even better because if you recall, we have our leaps for 2 years. So that would give us nearly 8 extra months of collecting rent on this property that is fully paid off. And that's a cheat code within and of itself. However, where it gets even better than that, just like with rental property, as the price of real estate tends to go upwards over long periods of time, we've seen from the chart at the beginning of the video that QQQ tends to go up over long periods of time as well. So once we near the end of the 2-year contract, we can then sell QQQ for whatever it's worth at that time. And just like with rental property, you can make money from the tenants monthly, and you can make money when you decide to sell the house for the capital appreciation. Now, nothing's guaranteed and nothing comes without its risk. So let me take you over to the profit and loss chart so you can see what would happen in this exact scenario if QQQ went up too much past our short call or went down. So let's take a look. All right, so now we're at the Analyze tab, and we can see I have the trade pulled up. Our long call of $490 expiring January of 2027, and our short call of $530 expiring February of 2025. Now, if we look at this x-axis down here, this is the price of the stock, so the price of QQQ. And then if we look at this y-axis over here, this is the amount of money that you either make or lose. So what I want you to do is pay attention to the number that pops up next to this blue line here. That'll show us how much the trade will be worth at the expiration of the short call. So here we are here. QQQ is exactly $516. And so you can see as I go up slowly, if you keep paying attention to the blue number, as QQQ goes up, so does the value of your trade. All right, and it'll keep going up all the way to your short call strike of $530. Now, once it's here, you can see that the trade would be worth $1,197. All right, now what would happen from here is if QQQ was beyond the $530 strike, you will be forced to sell your LEAP, aka your rental property, and you'll simply make whatever the trade is worth at that time. So the best case scenario would be for QQQ to end at $529.99. Therefore, you got the capital appreciation from the LEAP, you keep all the money you receive from the short call, and you get to keep your rental property, aka your LEAP, and continue to do the strategy every single month from there on. However, now if we look, if the price continues to blow past $530, that's when you'll start to make less money. Now you can see they're still at that blue line. We're still up on this trade. However, the further it goes, the less money we will make. All right, but we will be profitable all the way up to, let's see, looks like around $582. And so that's great because that's almost a 13% upward move. And while yes, QQQ could move up 13% in 1 month, that doesn't tend to happen. So could it happen? Yes. Is it probable every single month over and over? No. But like I said, probabilities are in your favor. So now that is if the stock price continues to go up. Now, what if it goes down? Now, this is the worst case scenario. So if we come back over here, so here is the stock's price at 516. And as we continue to go down, that's when we will start to lose money on this trade. Okay, so you'll be losing money on the long call, and the more and more it goes down, the more you will lose. But that is why we pick the furthest expiration date out, because as we've seen at the beginning of the video, again, QQQ has always gone up over long periods of time, except for once. There's only been one time in QQQ's history where it went down for more than a year. All right, so that's one. We always want to select the furthest out expiration. And then we want to use the 2 technical indicators that I discussed previously in order to get in on a good time. And I've personally been using this strategy off and on for about 3.5 years, and it's worked out great for me. I even had trades that I opened up back in 2022 where the stock market went down for most of the year, and I made a ton of money off of those because as soon as it hit 2023, the stock market just went right back up, and we've been going up ever since. But if you would like to learn more from me, come join the Trader Freedom community. Not only will you get my actual trades as soon as I enter them, but you'll also get my entire options framework via the Trader Freedom course. And then on top of that, you'll be within a community of people that have the exact same goals as you. The link is in the description below. I hope to see you guys there. But until the next video, peace!